What's up, everybody? It's Dex, and today I'm coming to you guys with an early weekend lesson. I didn't get last week's out, so I'm trying to double up this week. I know I already have a video about how to play the orb and how to play my orb alerts. But it's a really long video and I kind of ramble, so I'm gonna give you guys a more to the point version of that video. Okay, so what we're talking about today is the orb, the opening range breakout. Okay, get a Word document up here. Okay, so orb equals opening range breakout. Typically, my favorite orbs are the 3-minute and 15. Other people like to do the 5 and the 30, but 3 and 15 are my favorite. Okay? Works best on days we gap with volume or take out the prior day's high or low. Skip on inside days. Okay, so the orb works best on days that we gap. So anytime we gap on an indice, I'm always looking to take the orb. So this is a great strategy to couple with your levels, because it just gives you another option for something to trade. So it works best on days that we gap with volume, or we take out the prior's day high or low. So anytime we have an inside open, that's a day we pretty much always want to skip the orb. So this isn't a strategy we play every day, and you can drastically increase your win rate with this if you pick your spots. When I was really heavy on journaling, I believe I had around a 75% win rate with the orb. Like I was saying earlier, a lot of these trades aren't going to be, 500% winners. This is a strategy I use just to give me a little cushion in the morning. So, if I can get 10, 15, 20, 30%, that lets me start the day green right off open. And it makes your life a lot easier. So, the same aspect, we want to make sure we're not starting our day with a huge loss. So sometimes when you get that massive bar off open, you gotta be a little weary. Sometimes you want to just skip that because your risk to reward is going to be skewed. And when we do this, we also want to mark pre-market high and low, and mark any supply demand zones prior day. Okay, so let's get into an example here. We're going to be looking at IWM. This is my favorite indice to orb, especially if you have a small account, because you can get an at-the-money contract for a lot cheaper than you can like a SPY contract. For this strategy, you definitely want to get at the monies or use futures, because it is such a small move a lot of the time. We really don't want to play stuff that's super out of the money, because we're not going to get that, huge move. So we want to look to pick a strike that's very close, to where underlying's at. That's why I prefer IWM. And it also runs really hard off open. one way or the other almost every day. So it's a great tool for the orb. All right. So right here, boom. So here's our open, first 3-minute candle. This is a perfect orb opportunity, right? So we gapped, took out yesterday's low, and then we got a doji. Big indecision. So now here, we got our long trigger set here, and we got our short trigger set here. Another thing with orbs is you want to have your contracts ready. Have cons ready. This is a quick strategy, so you do not want to be fumbling around because you will get burnt. So we'll go over that another day, but I always have a call right when we open up. I find what I'm using for calls, what I'm using for puts, load them up in a watch list, in active trader, whichever way I'm favoring. So I'm ready to attack as soon as that pops. So we got our call trigger, put trigger. Let's go. Next bar. Boom. So we take out the high, and we're not waiting for this close. So that's what makes this strategy a little riskier, is you're typically not waiting for a close unless you see a really low volume break. This would have been kind of questionable since it is lower volume than the first couple candles we saw. But typically I'm taking it. Okay. So if you're filling here, we're risking this first candle. So once you're in, this becomes your entry. Okay. And then this becomes your stop loss. So you never want to risk more than the first candle. Okay. And then once we push past, so once we get a move like this, then I'm pushing my stop loss to entry. Okay, so this is a beautiful orb right here. We get our first 3-minute candle. We break orb high, so we go long, and then we have a beautiful run up. I like to take, multiple contracts. And then scale 10, 15, 20%. You scale quick, boom, boom, boom. And then you set your break even stop. Really easy strategy. There's not much to it. And if we had held this would have been an insane win. But we were really just capitalizing, on that. We're just trying to get in first. You're trying to get in early, and you're still having great risk to reward. So on these huge trend days, you really can get a massive move out of these orbs. And then let's just look at the next day for one more example. So here's a good example. So we gap up with a huge candle. These are the ones that sometimes can be skeptical. So if you get a big bar like this, you gotta realize that your risk is gonna be a lot more than that little doji, right? Because now you're risking this whole bar. That's almost $1. If you don't want to risk the whole bar, if you want to risk half, that's up to you. Rarely will I hold, if it goes against me, will I hold for this whole thing. So let's see what happens. So boom. We break on relatively low volume, but since we back tested orb high and broke, I probably would have taken this entry. So now we're long. And then this is our max stop loss down here. Let's see what happens. Boom, boom, boom. And then seeing these upper wicks, I probably, honestly, because I didn't see this, I probably would have been scaling right here. As soon as I start to see these heavy upper wicks, especially this low volume doji here, extended from my EMAs, I would have been scaling right there. But say we didn't, we're pushing our stop loss to break even, and we're just going to let this ride. And you can also use these as levels too, especially the 15-30 minute orb. You know, with your 15, 30-minute orbs, your bigger orbs, you know, you can watch these for retests and replay them. You know, it's not just a one-shot deal. So, like yesterday or the day before, you know, that 15-minute orb probably would have been a much better entry than that 3-minute orb. And that seems to be how it goes a lot, is the 15, 30-minute orbs are going to be a little more consistent, because you do get that consolidation sometimes. I know today we got, let's go to today. Today I did get a nice little move off the 15-minute orb. We'll look at it on the 5 though. So here's our first 3 5-minute candles. There's orb high, orb low. So today I took the break of this 15-minute orb high, you know, and I caught about 20% here. So what I did is, you know, I went long here. I scaled half into this nice big volume for about 20%, and I pushed my stop to break even. So I caught that 20%, and then I got stopped right out for the second half right in here. But what did it do? It let me start my day green and takes off a lot of the stress for the day. So I hope that makes sense for you guys, and it's a little more to the point. I know I got a little distracted there, but I think you guys get the picture. Oh, last thing. So the alerts. The alerts are quick. So, you know, so I'm not going to be giving you guys fill prices, contracts. It's just going to look like this. IWM orb long. Or IWM orb short. Right? Because it's so quick. I just don't have the time to give you guys the contract, the premium, yada yada. You need to be, you know, responsible for your own trade. I'm just giving you the idea. And this is really not something you need someone to alert for you. It's something you can just watch and take on your own. So when I'm doing this, I'm always taking, you know, 1 or 2 strikes out of the money. I'm typically looking for, you know, it's got to have over 20 delta, and then I'm usually looking for a contract around 50 cents to $1 for IWM. You know, because I don't want to go too heavy, and I want to get multiple contracts. So, and you know, always closest expiry, right? So IWM, like today, I went, I think 193 calls. So just barely at, 195 calls rather. Just barely out of the money. Yeah. And you just want to also just real quick just make sure that contract that you're grabbing has good volume and open interest. All right, I hope this was a better explanation for you guys, and if you have any questions, just feel free to hit me in the Discord. Thanks.